Let's talk about gold. What wild price action for the safe haven asset of gold. And what a beautiful price action, the exact price action that Trading Capital and members were expecting and hoping for. And this has been playing out phenomenally well. And I do think we're getting close to a buy level for gold in terms of another swing trade, rinse and repeat. Here we can see that we bought gold basically around the 1790 mark and sold it at the 2058 level, issued to our exclusive members that were able to execute their trades, alerts that were issued out on those said dates not so long ago. And now we're looking to pick up and accumulate gold in a few fair key zones here. If you notice how this bear flag action has been playing out to a T. Now, once you break this pivot low, that is going to be key because it triggers the bear flag to the downside, which ultimately I think you start finding major support in a lot of these zones here. So I'm just going to draw in some trend lines. I think you have tons of support in here and tons of support in here. And the biggest one, the one that I'm really hoping it gets down to in our level, is this downsloping trend line connecting pivot high to pivot high to pivot high to pivot high. And that should after a wild move like this where literally gold went parabolic and everyone thought it was going to the moon, it was going to make new all-time highs, which it was close to, but it's never a good sign when it fails to take out an all-time high. And if you look at the extension move, it was only natural that this was not going to take out the all-time high, or at least not sustain a move up in that area because of the way that this price action was heading into it. You need to see this asset move in a more controlled manner, a lower degree of angle slope, and essentially a better pattern. And there were a lot of bullish people out there because the fears and the hype of the Ukraine-Russia invasion were really coming to the surface, and the media was reporting it. It was the main focal point that people were experiencing. And there's nothing like fear as an emotion. The two most powerful emotions in this market are greed and fear. But the one emotion always trumps the other. And can you guess which one that is? Fear always trumps greed. That's why stocks take the staircase up and the elevator down. And this is the staircase up and the elevator down. So I do think we have more downside in gold. We will start accumulating in this zone here at these key levels for a longer term outlook on gold, because I do think you still keep going up and ultimately later in the year testing these 2,400-2,500 US dollar levels. But again, that's a much longer term outlook. So we're just going to be taking it week by week basis here and day by day. But ultimately you can see it's now trending in what was our resistance levels, our 1 and 2 resistance levels, is now the support and resistance levels once again. But once it breaks, then you're definitely going to head lower, but you have this long-term arc, which we've been monitoring now for substantial long period of time, and it's formed this massive cup and handle. But clearly weren't ready to take out this high. But the thesis that we at Trading Capital are going with, and when we'll start accumulating gold, is I think in the coming weeks you see gold make a move down here. Now there's tons of support for gold, so it's going to be bought up very quickly. You got to be ready. You got to be expecting the price there. You got to have your levels planned and trades set, because it's going to bounce quickly in my opinion. And what's really going to spike gold in the coming months is I think the inflationary numbers that we're about to receive, and we have some important economic data coming up, but more specifically around the inflationary numbers, we will see if the numbers are skewed in a direction that makes the CPI lower. But ultimately the CPI is going to report, and this is for the worldwide, this isn't for any one particular country, but certain countries will be hit worse and more affected. But with the inflation number really accounting for oil, a crazy oil spike, with the inflation number accounting for all these commodity spikes that we've seen in oil, wheat, aluminum, steel, natural gas, wheat. I think I said wheat, nickel, silver. So silver has been very tame in relative to where its price action is. But nonetheless, all of these inflationary shocks in the commodity space and input costs should raise the CPI expectations and actual results. And will that be a potential point where gold has bottomed at that point and then begins another ascent up? It potentially may. But nonetheless, the fundamentals for gold are still phenomenally superb. You did have gold fall substantially today because there's obviously the potential of some sort of peace talks escalating in a fashion that would benefit everyone. And then the dollar hit a 3-week high, the US dollar that is. 10-year bonds hit multi-year highs, putting pressure on gold. Palladium slipped majorly. It tumbled nearly 8%. So when you think of palladium as a precious metal, and for it to tumble 8%, that is quite a substantial move in a bearish direction. But nonetheless, the fundamentals for gold, owning gold, especially having some physical possession of gold in physical form, whether it's stored in a vault somewhere or with a private bank and security, it's very important to have a position of your net worth hedged, especially in these times of chaos, because this was a tremendous move. This is a tremendous move to the downside that I think is going to complete in and around these lower levels here. And then we will be a big accumulator of gold. If for some reason we can get back down to where we originally bought in, you would be expected to be a buyer of both hands. Okay, so the money printing won't stop. Maybe it stops for the next 6 to 12 months, but I suspect rates will go artificially low again. QE will begin to happen at a record speed once again, and that's just the cycle of our fiat currency system. I don't think this is the bust cycle. I think there's boom and bust cycles ahead of us. Eventually, we should see the fiat money decay into nothing, but then there will be some sort of alternative that technology is integrated to or with, and we'll all be using some sort of alternative centralized, again, fiat system. Hopefully it'll be something that's not a fiat monetary system, but I highly doubt that our governments and leaders will ever give up the power of fiat monetary